Hello and welcome to the video guide for how to set up and process the stand down timesheets and JobKeeper allowances through the ClockOn payroll system. First, we will start with how to ensure that you're on the correct release of ClockOn for the options that we are going to discuss. To find the latest release information for the system, you will need to access the ClockOn knowledge base. This can be done by clicking on the help buttons within the system. There. That will open up this screen, and from there you can view the current version of ClockOn and the current build of ClockOn. So at the time of this recording, the build release of ClockOn was 3.04. From there, you can view what release of and build of ClockOn you're currently on by clicking on the blue icon in the top left hand corner. That will bring up your registration details for the system. And from there, looking down in the bottom middle of the screen, you can see the version and the build number. Next, we will discuss the stand down leave type. This is used to indicate to the system that an employee that would normally have worked a shift was temporarily stood down due to the change in the normal business operation. The employee was not at work, and as a result, they're not paid their normal wage. The stand down leave type differs from unpaid leave in that while the employee is on a stand down timesheet, the employee is still eligible for their standard leave accrual entitlement. To change a timesheet to stand down, simply open up the timesheet screen, select the timesheet in which you want to change, select the type option and change that to leave, then select the category and locate stand down in the list. Save that timesheet, and that's done. So if you were to open that up in payroll, you'll get a $0 amount for that employee, but the leave entitlements would still count. Now, likewise, as you can do with any other range of timesheets, if you were to select a range of these and click edit, you can apply this en masse to your employee simply by doing the exact same process. And then instead of clicking save to progressively move through each of these items individually, you can click the apply all, and that will apply them en masse to every timesheet. Next, we will discuss the initial setup for the JobKeeper payment. If you haven't done it already, you will need to register for the JobKeeper payments through the ATO. This is not done through ClockOn. You will need to contact the ATO for more information regarding this. Once you have registered for JobKeeper, you will need to set up the employees individually through ClockOn with their start dates for STP. Now, to do that, you'll need to open up their individual employee card files, select the categories and dates section, click edit, and you'll note there's two new fields on this screen. One is start date and one is end date. The start date is the one you want to enter initially, and if you click this drop down, it will give you all the payroll dates for the fortnights in which the JobKeeper payment is valid for. Now, for the actual payment itself, for the first payment, you want to select the period in which your first eligible JobKeeper payment for the employee was rebated on. So if you had your first payroll for the employee in this stand down period ended on, say, the 1st of April, you would select this period. Now, if you have an employee that is no longer eligible for the JobKeeper payments, so say they've been terminated, you need to enter this one here for the last period in which they were eligible for that payment. Now, for the employees that are eligible for the full 13 fortnights, you don't need to do this. It's only for employees that are finishing their payments earlier. Next, we will cover how to set up the various conditions for the employee's JobKeeper payments. First of all, to do this, we'll need to open up the payroll screen and generate the payroll. So the first condition we want to have a look at is if an employee is getting paid more than $1,500 per fortnight. So we've got that scenario set up on Anna Barton. She is currently earning an amount of $2,850 per fortnight. Um, with this in particular employee, you're still eligible for the JobKeeper payment as an employer, but you don't have to pass anything on to the employee. They don't need a top up because they're already earning more than the $1,500 per fortnight. The amount that you get from the government is supposed to supplement you to continuously pay that employee. Now, the employee will still need the JobKeeper start date set up in their profile. This is still necessary. Right, so for the second example, I would like to present an employee that earns less than 1,500 per fortnight. So we've got Helene Bates here, who is currently set to earn $1,155.20 per fortnight. So with her current setup, she's not meeting the requirement of 1,500 per fortnight, so she needs an additional amount. We can do that through ClockOn, through the allowances screen. So if we click on allowances up here, and then click add, then change the type here from normal allowance to JobKeeper allowance. That presets some of the default values on this screen so they're in line with the JobKeeper payments. So the name being JobKeeper-top up, the PAYG location to allowances, and the process as being a before tax allowance. Now these amounts are before tax. They're not the employee is still taxed on this 1,500 amount. Now from there we can set whether or not it is a fixed amount per pay run or whether or not it varies. If for this purpose of this example, I'm going to assume that the employee's payment per period varies. So I'm going to leave that as $0. The other thing you need to note with these allowances is that they're not typically included in the super earnings base. At least that's the advice we've had from the ATO. You can elect to include it in the super earnings base, and to do that, all you need to do is tick on this option here. But typically, you don't need to. It's up to you. I'm going to leave that off for the purposes of this demonstration and just go save. The employee now has a allowance and deduction within their system for that JobKeeper top up. Now, we're not able to see that at the moment, and that's because the current view on the payroll is rolled up to the low view. So if we click on this up here and go medium, that will expand these options out to show that allowance. So we've got it here. So JobKeeper top up. It's got a pencil next to it indicating that you can manually change that option directly from the payroll screen. So if we come across to the amount section over here, we can enter that in. So now we need to work out how much we need to increase the employee's wage by to make the before tax income for the employee 1,500. So if we go 1,500 minus 1155.8 or 0.2, we get an amount of $344.80. So for this example, 344.8 increases the taxable income to 1,500, And because we did not tick on to include in the super earnings base, it remains at that $1,155. Right, so for the third example, we want to do an employee that has no earnings for the period. They've been stood down, they're not at work, they're still entitled to their leave accruals, so they've still got the stand down timesheets as we've previously discussed. Um, they're being paid at $0, and we have leave accruals for the period here. So accrual per this pay 2.7404 and other leave entitlements as needed. Now, for this particular employee, because they're getting nothing in their gross for their timesheets, they will require the full amount for the JobKeeper payment. So if we'll need to go into the allowance screen, and for the purposes of this demonstration, I'll just remove those other allowances and then click add. Set up just the JobKeeper allowance in the same way that we did it before, excepting I'm going to put a allowance for $750 per week in here. So half the 1,500, the system, because it's a fortnightly payroll, will double that amount automatically. And again, I'm not checking on the include in super earnings base. So let's just save that allowance. And because we set a preset value in there, that'll reoccur per payroll. So we've now got $1,500 there. We've got a taxable income of $1,500. Tax is then taken off it to give the final amount depending on the tax scale that the employee's on. So in this case, this employee is on tax 3 threshold claimed. And that's it. You process the employee as per normal and submit your STP as per normal. Please be aware that as an employer, you will need to confirm your monthly amounts to the ATO outside ClockOn as an additional step through the business portal. The details for how to do this should have been available when you signed up for the JobKeeper package. If you're unsure how to do this step, you'll need to contact the ATO for more detail. And that's it. I hope this guide has helped to explain how to process the payments through ClockOn. And again, if you need further assistance with this, please contact our support team at support@clockon.com.au and we'll be happy to assist further. Thank you for your time.